afternoon. We did see a bit of a late spurt or a bit of a late buying spree towards the end of the session. What do you put that down to? Are we seeing a bit of end of quarter buying activity?
Yeah, possibly. We're heading into a 4-day weekend here in Australia, but it was a good performance, just ticking up at the end, and that was really helped by probably the banks just putting in a little bit of a charge towards the end to finish in positive territory. Because for most of the day today, what the market did show, it illustrated how important the big four banks are to our market performance. The big four banks makes up 27% of the ASX 200 now, 25% of the All Ords. And most of the day today, they were trading pretty flat or even lower in the case of Commonwealth Bank. And while we have seen some very big and very solid gains across other sectors of the market today, I think we could have seen a much better performance by the market if we saw a bit more buying within the banks, because some of the other sectors, mining, diversified financials, insurance companies, were all up very, very strongly today. And what we did see on the market today, I think certainly the gains were exaggerated a little bit by the soft volumes we saw on the market today. It was a little bit surprising considering it was derivatives expiry day today. That usually sees bigger volumes in the market, but I think because we are heading into that 4-day weekend, the market pretty quiet. But we also saw a little bit of technical buying, and I think we also saw a little bit of buying of the stocks that have been sold off the most heavily since the market peaked back in earlier March. If we have a look at some of the big performers on the market today, Fortescue, before it rose 4% today, it was off 13%. We saw some good buying there. AMP was off 7% since the peak in the market. It rallied back 4% today. Cochlear, Arium, Seven Group was off 17%. It rallied back hard by around 3 or 4% today as well. Well, if we have a look on the charts, a couple of stocks in particular, AMP for example, we'd seen a little bit of a short-term head and shoulders pattern there and seen some technical selling. So this bounced back quite nicely today. Well, if we have a look at Cochlear, over the past 2 years, that $66 level has been quite an important level, and we could see it bounced quite nicely off that level today. So given the soft volumes in the market, only around $3.6 billion traded, probably exaggerating the gains a little bit, but nonetheless a good day heading into a 4-day week.
Some of those losses from yesterday, today, when do you think we might see a bottom for this sector though, Tim?
It's been a rare day where materials have outperformed the big four banks, so it was actually a nice surprise on the market today because the miners were the big outperformers, and the iron ore space in particular, Fortescue up over 4%, Atlas Iron 2 or 3%, Jindaobi I think was up something like 13% after being sold off very, very heavily over the past couple of months. So I think there's a few drivers in the market today for those moves within the iron ore space. The iron ore price came back up to $137. Saw JP Morgan upgrade Fortescue to an outperform rating. A few brokers suggesting that the sentiment's a little bit too bearish within the iron ore space at the moment and maybe going to see a short squeeze because the likes of Fortescue, Atlas Iron are fairly heavily shorted stocks. And I tend to agree that the sentiment in the iron ore space is a little bit too bearish at the moment. You just look at the iron ore price, it's come off the $160 highs to $137, that's lost around 14%. Then you look at Fortescue over that same period, it's lost 30%, Atlas Iron has lost 40%. So what this is telling you is the market is already pricing in significantly lower iron ore prices. Iron ore prices in the magnitude of maybe $80 or $100 a tonne. That's something like $40 below what the spot price in the market is. So while iron ore prices may trend lower over the longer term, I think the market's been a little bit too aggressive in writing off these iron ore miners. And you've got to remember, some of the bigger players like BHP, Rio, Fortescue are all looking at reducing their costs, improving their efficiency. The new mines that Fortescue are bringing on to up their production levels are going to be some of the most cost-effective mines here in Australia. And I think in terms of an investment, those bigger, more diversified, lower cost miners are looking good. I'd be a little bit wary of the mid-cap miners that do have very high costs of production. They might see a good bounce sort of this year if the iron ore price holds up, but I'd be a little bit cautious over the longer run. But at the moment, I think some of these fundamentally are looking like they're offering quite good value. I mean, we remember back in 2012 when the iron ore price did fall down to $80 a tonne. That was at a time where China was heading into its slowest economic quarterly growth in something like 12 years, where it grew at only 7.8%. And Fortescue's share price, for example, fell to $2.90. Rio's share price also fell very, very heavily. And the sentiment in the market was totally shot. And what happened after that, the market, Fortescue, Rio, they all rallied. Fortescue rallied back $85 over the next 6 months. So I think when the market becomes too bearish and too too bearish in terms of sentiment on mining stocks, it can offer a good buying opportunity for investors after the share prices come down so far.
Negative territory today. Woodside Petroleum down 0.9%, and that was despite that rise in oil prices overnight. What do you think's weighing on this stock at the moment?
Well, there's been a little bit of a disconnect between the oil price and some of the energy players on our market recently. You're right, it was down 0.9%, and really most of the large cap, that was one of the only large cap stocks making a decent fall, other than maybe Coca-Cola Amatil today. And the performance of Woodside recently has been pretty interesting. Basically, over the last 2 years, it's gone nowhere. It's traded sideways, and this is despite some actually pretty good performance in terms of financial results recently. You've seen their Pluto LNG project ramp up faster than expected. Net profit for 2012 was up something like 25%. Pluto adding significant levels to their production-wise, and I think they're in a solid position at the moment to be looking to growth in the future. But I think this is what the market's just a little bit cautious over at the moment. It's not really clear where Woodside's going to be headed in terms of their growth looking forward. They've certainly got plenty of projects in the pipeline there, but all of these, essentially all of them have risks attached to them, most significantly cost blowouts with relation to, say, the Browse LNG project, for example. So when you're looking at buying into the energy stocks on the ASX and energy stocks in general, really you're buying into future growth. And I think at the moment there's just a lack of clarity of where this growth's going to come from and how much it's going to cost, and how much it's going to cost investors for Woodside looking forward, because there's no doubt that Woodside has the balance sheet at the moment to look to grow their earnings, because in the medium term, earnings are looking like they're going to be a little bit flat. They do need some growth prospects to push production into the future. So 2013 will be a key year for Woodside. We've got an investment decision due by June 30 on Browse, but we're also going to have to hear where they're going to be looking to seek their growth in the future. So in the meantime, Woodside's not a bad dividend payer in the energy space. It has the prospect of raising their dividend in the future. So